All right, Jonas, going to wrap up with you. Jason asks, I keep hearing that time in the market matters more than timing the market, but what does that really mean for someone close to retirement? And I know you love these sort of riddles, these word games.
I
like
do.
this.
I do
Yeah?
love these. Great question, Jason. To put it simply, time in the market means that you stay invested through market cycles, Doug, so you don't miss growth opportunities. So we talk about this a lot, the speed of the markets. Roger and I talked about the drops in the stock market. The average drop per year in the stock market is 13%. If you're trying to figure out the best time to get in and out, that would be very difficult. You might want to leave that to some type of a day trader. If you have a long-term portfolio and you trust it and you're confident with that portfolio, it's going to guide you through these market fluctuations. And there's been some great examples on this show, guys. Jason, I hope that you were taking notes because Roger and Elias have some very successful customers that have never tried to time the market. They have their portfolios navigated to where they can really guide themselves through these market fluctuations. Now, retirement's a different game changer, Doug. Usually in retirement, you're done buying into investments. That's where what we talk about, what Elias hit on, these market fluctuations can be protected by some type of a bucket strategy.
Okay.
You're done putting into your 401k. You might be done doing your Roth IRA contributions because you don't have any wage income. Well, now we have a bucket strategy in place, and that's going to help you stay invested longer term. Bucket number 3, guide you through these market fluctuations. And one of my favorite callers from the AM 600 show, he always called in, and the first thing he said was, just tell the customers not to, not to miss the best 50 days in the market. And we have a guide, we have a page called the best 50 days in the market. If you miss these best 50 days, these are recovery days after the market drops. If some or all of your portfolio misses these recovery days, Doug, your long-term rate of return goes down significantly by large percentage points. And like you mentioned earlier about your 401k, how it's gone up the last 4 years. One of the things that I've noticed with people is that they're trusting their portfolios enough to enjoy those recovery years. And again, so Jason, to answer your question, to put it simply, time in the market means you stay invested over market fluctuations, market cycles, so you don't miss the growth opportunities that you really need.
Yeah, that's a good, concise way of putting it. Getting invested, staying invested. And when you're in there, I mean, obviously, every year you sit down with the customers and clients you have at Premier Investments to go over what they're doing. It's not just a matter of set it and forget it. That's on the front end, coming out on a regular basis, whether it's out of your paycheck to a 401k or to an IRA or to a Roth IRA, whatever you want. There's a guide that they have to market volatility at Premier Investments in Wealth Management as well. And it's another really good read. If you've not done that up to this point, I highly encourage you to do it because, Jason, it's not about market timing. It's about making good tea. You just put that tea bag and just let it sit.
It's about time in the market, Doug.
Exactly. You know what? The folks at Premier Investments in Wealth Management, they have an entire staff, not just the 3 folks that are on this show with me on a regular basis, but there's an entire staff that they have here that takes care of the needs that you have from the back office all the way to the front office. And it really is one of those full service things. Get in touch with them at premieriwm.com and find out a little bit more about what they do. It's philosophy. You're not just interviewing them, though. They're going to be interviewing you because if you've got this idea that you just want to throw all your money at a single stock and that's going to be your retirement fund, may not be the best match for my friends at Premier Investments and Wealth Management because they're about the haystacks, not the needles, right?
Absolutely.
Haystacks. You guys said that. The haystack's not. It's not me saying it, it's them. Get in touch with them today and build more haystacks. They will love helping you build haystacks. PremierIWM.com or the phone number 800-383-6590. For the Big Coon or Roger Abel, for Jonas Everett, and for Elias Randall, my name is Doug Wagner. Thank you for joining us. We'll see you again soon.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments in Wealth Management and LPL Financial do not provide specific individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Forbes' Best in State Wealth Management Team's ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firm. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.